From the News Channel 5 Network, this is MorningLine.
Good morning, everyone. Thanks for joining us on MorningLine. Nick Barris here with you on a Wednesday. It's just about a month from now, and it's tax time, April 15th. Have you filed? Are you going to put it off? Did you already get your return, you lucky duck? Anyway, this morning we're going to be talking taxes, and any of the questions you may have, you can call in. Don't ask me, though. Ask her. Dr. Friday, how are you?
I'm awesome.
It's nice to have you on.
Thanks.
It's always a pleasure. Busy time of year for you right now. It's kicking in.
Oh, yes. This is probably the worst time because a lot of procrastinators, you know, I mean, there's the ones that get their W-2s and they immediately go right to get their refunds, make it happen.
Right.
But then you've got the ones that have to wait for tax forms, and a lot of the stock reports and things just came out.
Yes.
So people are just receiving them, so now it's really happening.
We were just talking about that in the newsroom yesterday about how, and there was some confusion based on some stock that was, you know, purchased, and then you had the stock, and then the company that the stock was in got sold, and it went over. And as it stands, some people had paid when they sold some of their stock taxes on it, but they didn't have the forms to prove it, and now they're going to be billed for the full amount that they took. It can get very confusing.
And keeping track of that basis.
And what if you can't? What if you don't get the forms? And
well, that's where extensions were created. You don't just jump in and do your taxes because you think you have all the information. If you know you don't have it all, file the extension. It's going to save you a lot of heartache.
Okay.
Because a lot of times people are like, oh God, I've got to hit that April the 15th deadline, or I'm going to get audited. That's, you know, I mean, I've never done an extension in my life. I hear those words all the time. An extension is not a bad thing. In fact, there's some documentation out there that proves that filing an extension gives you a less likely to be able to, that they audit less of the people on extension than they do before. I'm not going to say that that's a fact. I'm just saying if it's necessary, that's why extensions are there. Now, extensions do not extend the money you owe. So that's very important to know.
Explain that now. So you still have to pay something?
You need to estimate. You need to pay 100% of what you owed the year before, or what you actually think you're going to owe.
So what is the extension for then? What is that delaying? Oh.
Paperwork.
So meaning you still have to pay, because I was going to say, if you get an extension, some people, do they get an extension on paying, and if you get an extension to paying, then you're paying, and then you're paying interest.
Yeah, the only thing that then the extension does is failure to file. There is a penalty for failure to file, so it does extend that.
But when you say extension, you're still filing by the 15th.
Well, you're just filing a single form and then you're sending money in. So you're requesting, and then you get 6 months, and then you're able to go in and do it. But you don't want to file and amend. Amendments are, amended tax returns are, about 25% of them are audited. Okay, so when you go in and amend your tax return, you have a much higher risk of being audited than if you do a regular tax return for the first time, which is only about 3%. So there's a huge difference, right? So don't just say, I'm going to file because I have to hit that April 15th, even though you know you're most likely going to have to amend that tax return. Take a step back and do it right the first time if you can. It's
interesting, though. You know, you depend on the companies, the people that you've worked for, to send you these forms, and if they just don't. Okay, now fortunately I don't have a lot of outside income beyond this. My job here at the station is the bulk.
Done a great,
and I get
great investing then, huh?
Yes.
Knocked yourself out, did you, Nick?
Yeah, there you go. Not so hot. No, but I mean, some of these others, like for instance, I had that movie role in Country Strong.
That's true.
So I get residual checks for that. And now, they do send me, what form would that be for the check?
1099.
Yeah. Now, for some reason, they didn't send that to me, and I know I got the money. I'd space on that. I wouldn't think, oh, I didn't get that form. I wouldn't. I just would file and forget all about it, and then later, of course, I'd get nailed. I depend on them. I just don't think that way.
Well, and that's pretty typical. I mean, I have some people that, let's say you lost your job in the early year, and it maybe took you a few jobs to get to where you are today, and they sometimes forget about some of the jobs they may have had earlier. And so they file with what they think, and then a new W-2 comes in the mail, and they're like, oh, wait, they're supposed to have that by January 31st. They didn't get it to me, so in some way, the company was at fault. Remember, the buck stops with you, the taxpayer. So, like Nick's example, if he doesn't report any other income, the government will send him a sweet little love letter saying, we've changed your tax return because, and they would then list the royalty or the 1099 on there, and they would say, this is your additional tax. Now, I will tell you, sometimes the IRS math isn't as perfect as we like, so we have found some flaws in the way they add those in.
because they'll know about it, obviously.
Right, they're going to know
I
about
may not know, but they'll know.
That's right, and it can take them 2 years to tell you. And sometimes we think that maybe they wait that long to be able to get a big enough bill. So if you find out before then and you haven't heard from the IRS, take the initiative, correct it, and fix it now so that the IRS then doesn't come back later and hit you with more and more penalties.
Yeah, and you're right. In addition to what you owe, you'd have to pay a penalty, probably.
Absolutely.
Interest or penalty,
Interest
right?
and penalty. You'll get both.
Okay. Yeah, I mean, that's one of those things. Well, anyway, right now, is there anything, and we'll get to phone calls. The lines are open if you have a basic question one way or the other, if you're preparing your taxes yourself or you have someone else doing it. Is there anything, again, different this year over last year that people are going to encounter?
Well, probably the tax on the health insurance.
Okay.
We have 2% this year, right? That we had 1% last year.
Oh, yeah,
so
right,
the
sure.
penalty
Like, I
has
know that. Okay, no one knows that.
The penalty has doubled. So whatever your penalty was last year if you didn't have health insurance and nothing changed,
I see what you're saying.
it's going to be twice as much this year. The other is the 1095 form. A lot of people last year didn't really know what that was. The 1095 form, for all of you that may still not know what that is where the insurance company is reporting back to you. You'll get it from your boss will send you one. If you're in the marketplace, that's the most important ones because it's going to show how much you paid, how much the government paid on your behalf, up to like $2,125, I think, $2,125 the government can supplement you. And let's say you did have a little bit more income this year than the last year and you reported based on last year, you could end up having to pay back some of that money. That's a big thing this year. I've done, just last night I did several returns. One guy owed $1,500 back of that $2,100 of supplement. Another one owed $900. That's huge when it comes to your refund because now that's money coming either out or you're writing a check now.
Right.
To give back the government their money. So you can go anytime in the year. If you know that there's a change in your income, go on the website, change it so that $177 or whatever it is they're supplementing will reduce. Yes, you'll have to write a bigger check, but at the end of the year, you're going to get dinged.
Are there any new deductions or things that have been added or anything like that? Was the standard deduction, how much is that now for one person?
A standard deduction is about $6,000. He's putting me on the spot here.
Well,
married couple is $12,600, so half of that is $6,200 is what a standard is.
Okay, and did that change over last year?
Every year it's about $200 more.
$200 more, something along those lines. Okay, and how do you decide whether or not you take a standard deduction or itemize?
My computer tells me no.
I know, well that's you. Well, I count on you to do that for me. But
it's very simple. Again, if you're a married couple and you have less than $12,600 in itemized exemptions, which would be made up of possible medical expenses, property taxes, don't forget, a lot of times people come to my office, if you've purchased a new car or a camper or a bus or a motorcycle and you paid sales tax, that could help up your sales tax that you're allowed. Property taxes, mortgage interest, contributions. If all that adds up to more than the standard deduction, then you will itemize. If it adds up to less, you will not. If you're filing separate, married filing separately, remember if your spouse itemizes, you have to itemize, even if you're itemizing is zero. So just keep that in mind.
All right, let's squeeze in one phone call before we take our first break. The lines are open if you have basic questions, and I have a lot of questions for her as well. Let's hit Joe up. Joe, good morning. Hey, Joe. Did I hit the button all right?
Oh,
Joe, are you there, Joe?
Nope.
See, he's banging on something.
Joe is so frustrated.
I think he's working.
He's working his inhibitions about tax code out. I've had those days, to be quite honest. There are days that I have just gone crazy.
Oh, look. Okay, do most of the people you work with, do they owe or do they get money back? They owe, don't they?
Yeah, because a lot of my people, when you need tax help, most of the time you're self-employed, you have rental properties, you've had something happen, you've sold properties, whatever. So normally those kind of individuals, if you're a single W-2 and you're a single person, unless you're claiming married in 3 and you're actually single in 0, then let's be honest, you're not going to really need somebody. In fact, in some cases, I think you can get free tax preparation.
Yeah, these days, yeah. If you're in that way, you can do it pretty much on your own.
Absolutely.
How many people do you deal with? Hundreds? You're doing
thousands.
A bunch? Thousands.
I do about 3,000 tax returns in a season.
Okay, do they all necessarily come to a head right now? Or, I mean,
no, thank you very much. No, extensions are my friend.
Okay, extension.
I love extensions.
And okay, if you could, what are the 1 or 2 main things that'll target an audit for you?
Well, I think 2 things. One of the biggest things we have pretty much in our business. I've been at this now 20 years this year, so
okay. Really? Wow.
starting to get old. Is changes of tax returns. So most of us do the same thing all the time. Then something changes. It could be as simple as a change in selling property that you didn't know, or a big stock sale, or any of those kind of things. So those kind of changes can trigger, no question, an audit.
But have you been, as we go to the break, have you seen people before where they finally come into you and you're preparing their tax, and you look at, and you go back maybe a ways with them looking at their records, and you scratch your head and wonder, how the heck did you dodge a bullet and avoid an audit all these years?
Yeah, and I tell them, I said, this is, because when they come in and I now have them paying more in taxes, especially, I'm like, I can't do this. This is going to catch you. Maybe you got away with it or not, but keep in mind, the IRS is working 2 to 3 years behind us.
I know, but I'm just saying, there are people who've probably gotten away for years.
Come on, yes.
I mean, because the IRS, as hard as they work, there are millions and millions and millions of people they do this for, and there are going to be some that go through life and don't do it right and never get caught.
Never get caught. Because of the consistency. They have done it wrong all the way, so the computer system, which is how pulls most of our audits, hasn't triggered them, I'm telling you.
Isn't that interesting? All right, on that note, we'll take a break. Be consistent. We'll be back with your phone calls. We'll get Joe and others. If you want to jump in, 737-7587. She's with us till 9. Back with more right after this.